This is Mitch, and welcome to the 1000houses.com podcast. I'm here with Keith Baker, and we're going to be talking about how to become a private lender and all things related, because I've often thought, what a great way to start a business, even if you're like young, because you can loan on just about anything. You can start with any amount of money. It's a business that you could build over time. You know, if I'd have been in the loan business starting when I was 20, by the time I was 35, I'd have probably been a multi-millionaire, because I would have started out loaning on little things. I would have learned about the importance of collateral and the ways of the world. And when I say that, know that people make a lot of promises they can't keep or they're not going to keep. And so we have to have backups to backups, plan B and plan C, so that if things don't go as they're supposed to go, we still can get made whole and move our business and our retirement plans forward. And so I really like this topic. And so I'm going to introduce us to Keith Baker. How you doing, Keith?
I'm doing well, Mitch.
So you're sitting over there around Katy, Texas, around Houston. And how long you been loaning private money?
Not long enough. I'm not a multimillionaire from lending. No, so I'm trying to think back. It's kind of a funny story. I learned about private lending through self-directed IRAs in about 08, 09. Began my education, but didn't actually start. It took me about 3 years from being the fly on the wall in the back of the room, until I started voicing up and, meeting people that were actually, could use my money, and who had a pretty, their track record said they had a pretty good chance of keeping my money safe. So it was about in 2012, 2013, started coming into getting, okay, oh yeah, we can use the title company's attorney. That's no problem. Yeah. As long as you're happy with the docs, sort of all those stupid young mistakes that, fortunately didn't hurt. I didn't suffer from them, but, I did learn that, oh, wait a minute. If that attorney that works for the title company drafts my documents, title company is his client, not me. Right. So yeah. That started. So anyhow, in earnest, 2014, 2015, really started kicking it into high gear. And then met a student of yours, actually. When one of my lenders went into wholesaling, didn't need money. I mean, I say lender, one of my borrowers flipped his model to wholesaling. Then he turned me over basically to Landon, and said, do you know the Mitch Stephen method? And anyway, long story short, I still have notes out there with Landon where the note is actually come due, but it's steady money every month. And I was like, we'll get to an extension at some point, sure, we'll just keep it out there. But anyhow, so that's sort of how, got into it, how long I've been doing it. And then in 2018, I launched the Private Lender podcast, which was simply to help people stay safe. I found that there are a ton of gurus that'll teach you how to raise private money, where to find private lenders, but nobody was out there telling the private lender how to stay safe. And I look at a private lender as, I'm the pretty girl on prom night. My date's going to tell me whatever I want to hear, to get my money, basically. And so that was the whole point of the podcast, was to put that awareness and education out there, how to stay safe. And by the time this launches, the Private Lender Academy should be live, doing the same thing, teaching people sort of the basics. And when you say the backups, yeah, I like to look at this as sort of a NASA operation. We're going to have triple redundancy in our systems, right? So we're going to start with LTV. That's our first backstop, to make sure that we're not overloaning on the property.
LTV, just for the loan to value. So you're loaning a certain amount of money on what value of property, because you're going to have a lien, or you're going to take that property as collateral. So what's your risk? I mean, if you're loaning, $100,000 on $1 million property, that's not much risk, because you're either going to get paid your $100,000 or you're going to get the $1 million property. So, you can work that loan to value into your favor. And you decide as the private lender how much risk you want to take. If the guy wants, $70,000 on a $100,000 house, and you think that's not enough room, then tell him you'll only give him 60%, or $60,000 on it. You decide what you're gonna how much risk you want to take.
Exactly. It's this is my little, for those that are watching, my money and my terms, right? So that's the way I like to tell
So,
folks.
that's, that's, golly, there's so many things going through my head right now. Almost blew up. Um, so just so the audience knows, I mean, I've had a private lending company since 2005.
Mhm.
Okay. Um, Raymond Braun and I started a private lending company because I had so much private money, I couldn't find enough deals that met my criteria to get it out. But if I didn't get these people's money out, I would lose their money. They would move on, they would go. And unfortunately, half the people, when I would call them back and say, man, I'm sorry it's been so long, but if you still have that money, I'm ready to use it. Out of all the people that told me, no, I've moved on, half of them had lost their money in the decision that they made.
Ooh.
Because I had kind of set the bar high with the interest that I wanted to pay them. So they were out trying to find something other than me that would meet that requirement. And usually when you start getting paid 8, 9, 10%, 12%, the risk of your position, whatever you're trying to do with your money, goes up, because normally risk is associated with higher rates of return. The higher the rate of return, the higher the risk. So even the people that I talked to did not know that they had lost the money yet, but I was pretty sure they had lost the money. When you say, well, may I ask what you did? And they said, yeah, I loaned it to Uncle Fred in Alaska for a snow cone factory. I said, okay, did you get a first lien? No, we did a handshake deal, okay, that money's probably gone. So I was not only doing the money, come to find out, so that I could keep it out in the wings. Hard money lending or money lent to investors is usually short term. They just want to buy it, fix it, and flip it. And then, when the flip ends, you get your money back. So I was doing 6-month, 8-month loans, just kind of keeping the money that I couldn't get to right now, making some money for my private lender. I would always borrow the money directly. I was always the borrower. I never sent them to anyone because that would be real risky. I would borrow the money directly, and then I would loan the money. My company would loan the money and be the first lien holder to whoever we decided to loan to, so that if there was any problems, we just always made the payment, and we would go collect the collateral, because we know how to collect the collateral, get it. And we knew what to do with the collateral when we got it. We know what to do with houses in real estate when we foreclose on it. And we also knew, like you said, the most important part, right? We didn't loan any more than we wish we would have bought the place for.
Yep.
Because we always got to figure when we're making a loan that we're going to end up owning that place. That's what you got to figure. I don't want to own it. I'm not in this business to go yank the rug out from under people and take their properties. I'm not. But I may, the whole nature of this business is you either get paid or you don't. There's only two things can happen.
Very binary.
So I just wanted the audience to know, I've been loaning for a long time, and but for me, it was a way to just keep money that I couldn't get to yet moving.
So in that 6 to 8 months, when something else came up for you, now you had that lender's money that you could put to work in your system. And so people ask me all the time, how come I don't do the same thing? I know, I'm coaching private lenders. I teach private lenders, because simple, brokering deals and loans is a job. And I already have enough of those. I don't need, any more. But in your case, it was almost this wonderful necessity that, okay, if you did a little work now, the fruits of that labor not only would you get paid for your time in the meantime, but in the long term, you would be able to use that money for your deals.
Let's talk about the dynamics. And I want people to think about the people out there listening. You're considering being a private lender, okay? As a business, okay? As a business, if you're out there and you want to consider that as a business, then here's how it worked as a business for me. I was borrowing money for 6 and 7 and 8%, and I was loaning it out at, the maximum amount allowable by law, 18% minus 1, so I was loaning at 17.9. Now, what it looked like was I was loaning it out at 14%, but if there was, for 6 months, And if they could do their flip in 6 months, it was 14%. Not bad, because I mean, a lot of these flips only last a month or a month and a half or 2 months. You know, it's 14% annual interest, not 14%, you know. So they were only paying a fraction of that 14% when they flipped the house. But if they wanted an extension, it was $2,000 every 6 months. You know what I mean? So it got up pretty much close to 18% if they kept needing extensions. And like you said, I got people that just extend every 6 months, and they've been doing it for years. But whenever I needed the money, I could call them and say, you know what, this is the last 6-month extension.
Right.
You know, I'm thinking to myself, I need that money now, because I've got all the other money placed. My money, I do seller financing. So when I buy a house, I seller finance my buyer at 30 years fixed, you know, at 10%. So that money's out for a long time. I mean, my money doesn't go in and out like a flipper's money, you know, got it in the house, fixed it up, flipped it, got the money back. My money will be out for however long I can borrow it for my private lenders. If I can borrow it for 15 years, I mean, it's going to be out a long time. So I have to continually keep increasing the amount of money that I have. Right before COVID, I had $26 million on the street that on the first, I had to make payments on $26 million. It was okay, because I was owed $42 million and they had to make payments to me at 10%. You know what I mean? But so my point is, I was borrowing money at say 8 and I was loaning it out at 18. I was making 10%. Don't split hairs with me on usury or anything, but I was making 10% on money that wasn't even mine. But I was earning it because I was advertising for borrowers. I was talking to borrowers. Then I was going out and looking at their properties and researching to make sure I even wanted to loan on them or the property. You know, it's kind of twofold, because I didn't want to just take anybody as a borrower, because the deeper you get in with shit asses, the more shitty things happen. You know what I mean?
Yes.
So, you know, if you don't like the person right off the bat, let's just move along and let's find a better caliber buyer. And it's easy enough to kind of learn who people are. Then if I like the guy, and I don't necessarily loan to newbies, but that's not true. If I was a newbie that knew what he was doing, you know what I mean? You know, had some life skills that would really pertain to this. I thought he had it going on. And plus he only needs 50% of what the house is worth. Okay. The guy's got a lot of cushion, you know? So that's what I was doing. I ended up being in the hard money loan business, loaning other people's money out and making they call it the arbitrage, right? Between the interest rate that I owe and the interest rate I was collecting. I was making the arbitrage, and that turned out to be a pretty damn good side business. I mean, I know that there was years that company would profit $7,000 or $8,000, $700,000 or $800,000. You know what I mean? And it wasn't a full-time gig. I was only doing it just for self-preservation. So, I mean, so I could keep the money in my court. And I still ended up making, you know, splitting that with my partner. I made some pretty damn good money. And at one point during the 2008, 2009, 2010 recession era time, you know, I picked up 40 or 50 properties that I wish I would have bought in the first place, you know, but I wasn't able to buy them because somebody else found them before me, but I ended up with them during the recession by circumstances, you know? Right. So does that sound pretty much like how you do it?
Yeah. Well, no, you made so you make a very good distinction there. So there's a very thick line between hard money and private money, right?
Yes.
So my money came from, I was not very smart. I didn't do things the right way, you know, having parents that were born in the Depression, you know, education was everything. So I always laugh and say I had immigrant, you know, 4th generation immigrant parents that pushed, you know, the education route. And I have, you know, and just a little background, I always say I will always be middle class. I had, you know, grandparents that were sharecroppers and had nothing, not even the land that they worked. And then I had grandparents that were, you know, a medical doctor and president of the Oklahoma State School Board. So, you know, there's this, but both had amazing work ethics, and they both had entrepreneurial spirits on both sides of the family. So I'm very fortunate from that aspect. And in going to college, I took, I'm going to study what I love. Right. And so I double majored in philosophy and German. My mother cried almost. She teared up when I told her that this is what I was going to spend thousands of dollars and years pursuing. The joke in the family was I was studying to be unemployed. But with the work ethic I had, I started working in construction, yada, 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 parlayed that into working on oil rigs in South Texas and backwaters of the Gulf of Mexico and Louisiana. Had a nice 401k when I left the oil field. Turned that over into a self-directed IRA. So my biggest negative, the negative I have as a private lender is I quickly run out of my own money, right?
Anybody's going to run out of their money. It really doesn't matter who you are.
Yeah.
If you're really good at selling your business, or finding houses or finding borrowers or whatever, you'll run out of your money unless you're, some Prince of Arabia or something that has an endless number of oil wells that just keeps
an oil spigot that they just turn the tap and go sell a few barrels and okay, let's go get a new Mercedes. So yeah, for me, it's all my money. As I say, my money and my term. There it is. My money, my terms.
So you're only loaning your money.
Correct. As of right now, and training folks to loan their IRAs, their 401ks or inheritances, or even they can borrow from their life insurance policies if they're set up properly, to loan money out. And to your point, to play the arbitrage, right? I can get 4%. I pay 4% on my life insurance policy loans. I can loan that out at 12%. Easy,
Yeah.
So that's what I do.
Be your own bank.
Be your own bank. Yeah, correct. Yeah. Got into that.
So the only reason why the be your own bank system didn't work for me, and this is just a side note, we'll get right back over there, is that I know how to make too much money with my money buying houses and seller financing them. Like I'm making 20, 25, 30% on my money.
Right.
The be the bank, be my own bank. It just was more logical for me to go find private lenders that wanted me to lend my money and just go straight to the 30%. You know what I mean? Like I put my effort there to find the private lenders.
No, your model of using private money for your deals. I mean, yeah, I can see where bank on yourself wouldn't work for the volume that you do. Yeah, no, it's not robust enough.
Well, anybody who knew what to do with their money, whether you're selling cars or whatever, if you know how to make more than 4 or 5%, right, with your own money, then be the banking system may not be for you. I mean, there's a lot of nuances. That's a huge subject, and we're not.
Yeah, so we got my kids on the policies to strictly so that in 20 years, there'll be enough accumulation where they have something. Whereas my policy is 10 years old, so I've only got a few tens of thousands that I can loan out of it that I've accumulated. But anyhow, yeah, we can, don't get me wrong. I love the bank on yourself system. I don't regret it at all, but yeah, for your scale,
it's a place and time for the right person in the right situation, the right mentality. But I do want to make the distinction. I'm borrowing private money and I'm loaning it out as a hard lender. You know what I mean? So I'm borrowing it cheap and then I'm loaning it. Hard lenders are traditionally more expensive. And so what you're trying to do is teach people how to either size someone like me up and make the 8%, or learn to go ahead and skip me and go direct, and make 12, 13, 14%, whatever you can make.
To originate their own loans. That's my goal.
Originate your own loans, whether you're originating it to me, because I'm a little more passive. Once you like me, you loan me your money. You don't ever hear anything but checks hitting your mailbox because I do everything else. I go find the buyer. I go find the lender. I handle the foreclosures. You'll never know what happened. My house burns to the ground. You'll never know.
Never know it.
You'll never know. And it has happened before.
Yeah. Well, and I tell people that, when they become students of mine, I say, look, you're not going to be driving a Ferrari and dating a bikini model in a year. This is not get rich quick. This is slow and steady wins the race. I said, look, you can make a lot of money private lending or, hard money lending if you wanted to, go that route. I said, it all depends. How passive is passive? How passive do you want to be? Right. Because I love the numbers of the 12%, 15%, 6-month flips. Right. But I got to work my money more often.
Right. But so that's where I come in as a choice, or people like me come in as a choice. Like I'm paying 7 or 6%, right, or 8%. But that's where you don't have any work. If you want to make 12 or 13 or 14 or 15 or 16% return, then you got to go find the borrowers. You got to size them up. You got to make sure the payments are collected every month. You have to send the foreclosure notice if they're not paying. You have to hire the attorney if they're not paying. You have to take the property back if it does, if you do get it, then you have to figure out how to sell that property to get made whole, which you'll probably, if they're listening to you and or me, will make a lot of money when you get your property back. you'll probably have a little coup there of a cash injection. You'll probably leap forward in your retirement plan if you ever get the house back, if you've done it how he's telling you how to do it.
If you do it right up front, which is the plan for the worst,
Yes.
Reverse engineer your note and your terms beyond that. House could burn down, to your point, right? There's insurance policies for that. I'm a lender. I'm the mortgagor, right? So as a private lender. So if that house burns, that lender or that borrower won't get any money until I release it. If there's a claim, right? If there's a claim. So I can get paid whole.
But you're going to be dealing with it.
Yeah, exactly. But then now, so to my point, and now that becomes an asset in my self-directed IRA, right? So now what I would do is I would look to owner finance it myself, put it right back out on the market, create a note, and then resell the note and recapitalize it. Maybe take a second just for some cash flow.
To get your money back, all you had to do was just walk into any real estate club USA and go, I loaned this amount of money to poor so-and-so, and he got killed and hit by a train, and I just want my damn money back. If you've made the loan right, there should be a fist fight in the hall, and there'll be a little bit of blood on the check, whoever cuts, but it's okay.
It's not your blood.
Get made whole.
Yep.
If you go a little further and do the work and list it with an agent and everything, you'll have a financial uptick in your IRA, pretty substantial, because you're going to make some real high rate of return on that one property.
If you do it right, you never trust and always verify. You never trust the borrower. That was one of my early mistakes. Hell, my most recent mistake was trusting a borrower. It was a friend of mine, right?
Of course, that's how it always happens.
Always a friend, right? And so,
or family.
Or family. So I have one of my core values. I don't lend money to friends or family. I give them what I can without the expectation of it coming back, right? So I only give what when you're on a plane, what do they tell you? Put your mask on first, right? So I take it the same, and I've angered some folks, but they've sort of respected it at the end.
I have this big rule too, and I also sell houses to people on payments, right? I don't want any one of my friends. I won't buy a house for my friends because I'm into buying houses to make money, right? Yep. I won't sell a house to my friends because there's a chance I might have to take that house back to protect myself, to put my mask on first. Mm-hmm. And I always ask myself, do I have what it takes to foreclose on this person and yank this house out from under them if they can't make the payments? And if the answer is no, then, which is usually friends and family, because everyone else, I'll do what I got to do. Mm-hmm. So I don't deal with friends and family. Mm-hmm. I just don't, because I can't win.
No, you can't.
The only way I could win is if they do what they say they're going to do. But I have, like you said, man, you can't write this down enough times. You have to plan for the worst case scenario. And if you can live with that within the parameters of your loan or whatever business strategy you're trying to do, if you can live with the worst case scenario and not collapse under it, then go in, because everything else is upside.
Yeah.
When I look at houses to buy, I'm looking at the worst case scenario. I'm always asking myself this question: if this house catches on fire, where is the back door, and how do I get out of it without burning up with the house? Mm-hmm. If there's no back door, I'm not doing the deal.
Nope. No.
And back door in this case is high LTV,
yeah.
or enough, whatever you think is good.
There are two
core values. What do you loan your money at? What LTV do you loan at? What do you like?
I like to set it at 65%.
Okay, that's exactly where I'm at. Maybe through osmosis, Landon transferred that number to you. But that's where I'm at.
Yeah, well, Landon owes me a lot of money. We'll just say that. So, but he missed his first payment to me on my first private loan to him. I made it to him in June, and July 1st was the date the payment was due. And I think it was like July 5th or 6th. I'm sitting in his office, and I was like, "Hey, Landon, what's today?" "Oh, it's July 5th. And it's a Wednesday, and I made a loan to you last month." And he's like, "Oh, I didn't pay you."
Oh yeah.
After that, he gave the checkbook to his wife. I've been paid on the 1st every month ever since.
That's usually when there's a problem, is the new loan doesn't get into people's system. You know what I mean? Yeah. It's always the first month. If you can get the first month, then it's good after that usually.
I thought it was hilarious. I was like, this is not good, Landon. This is not how we build a business relationship.
You were busting him, huh? Okay, so 65%. Why 65%? The obvious answer is it's enough room for you to get made whole if a lot of things go wrong. But I would take it a step further, which is something I think you've said that you're not doing. You're not borrowing other people's money now and loaning it out. You're just loaning out your money. But 65%, other people feel good going in it. So I could borrow other people's money and then loan it out. They felt good at 65%. Now, 65% for me is the most I will buy a house for, 65% of its value. It's the most I will borrow on a house, 65%. And it's the most I will ever ask my private lenders to loan me is 65%, because I feel like it protects everybody. That number is low enough. That LTV, loan to value, is high enough that everyone should be able to get made whole. But in my scenario, a little bit different than yours, I just want to point out, is one of the reasons I picked 65% is because other people feel good about that number too, that have money in their IRAs, that want to get it out, but they don't want to do any work, and they'll loan it to me. And now let me say this, 65% is the highest or the most I'll go in. I average 58%. Mm-hmm. And let's talk about a little tip I'm sure you're using, but and if you're not, then it'll be a good nugget, but I'm sure you are. I had a lot of people coming in wanting 70% loans, because there's a lot of companies out there offering that. They're very cumbersome.
That's your standard hard money loan.
Yeah, standard hard money loan. And I would just say, how much you want for the rehab? They said, well, I want to borrow $50,000 to buy the house. I need $20,000 for the rehab. It's $100,000 house. I said, well, so you want $70,000 on 100? That's 70%. That's over my limit. But have you, how's your credit? They said, or I would know because I'm looking at it. And I say, right, you can get a 0% interest credit card. Why don't you do your rehab on your credit card and pay nothing? Take that 20 grand. And now I'm only loaning $50,000 on a $100,000 house. And the house is getting fixed up nonetheless, but it's getting fixed up with his money.
Yep.
So how I've really gotten my number down to 58% is teaching people not to borrow the rehab money from me. Yep. Borrow the rehab money off your 0% credit introductory offer credit cards,
Yes.
And keep me out of that. So I don't have to go out and look at, the draw schedule and all that crap.
I do few rehab draws. I do very few of them. Right. I like the owner finance model. I also, I like, look, there's games like poker that take a while, and there's games like craps where you could one roll the dice and you're out. Right. And so I sort of look at the same way, but I will loan, I'll give you the best deal I ever did is my first commercial deal. Right. No rehab. It was a guy I was loaning to on the single family resident side of things. He said, hey, he was wholesaling, got a bite on this little L-shaped commercial building that had a convenience store. Then it was a Mexican restaurant. Then it was a convenience store, and it had some schizophrenia as to what it was. Anyhow, so I go out and take a look, and I'll never forget. I bring my kids with me; they're young, and there's like broken glass everywhere, and I'm yelling at them to stay away and put them in the car. And I was sort of nervous. I was like, because it was just simply my first commercial, right? And it was in a part of town I wasn't familiar with. So I said, how much do you want? He goes, I'm looking for $70,000 for 6 months. And, I want to pay 8%. I was like, I don't know about that. And I said, look, I don't know any commercial appraisers. I hadn't put that in my wheelhouse. I'm just doing single family. So we found a neutral appraiser. And I told him, I said, look, this thing comes back at 150 appraisal. I'll loan you the 70 grand, right? That's enough cushion for me. And that's a little under, 50%, right? Turns out the property was appraised at $305,000. I had a 23% LTV on that property. And the day we closed, I called the borrower and I said, you don't have to pay me a dime, and I will loan to you again. You keep bringing deals like this at 23%. I said, you don't have to pay me. I'll take that all day long. Of course, he paid me as agreed on time. And unfortunately, he cashed me out. But what he did was he sold that, got me out, got commercial paper in there on the first lien. Okay. Wrapped a note, sold it to a lady who a year and a half into it, got in a fight with her boyfriend, decided she walked away from it. He got the property back with the restaurant in it.
Yes. So, I just had a revelation and I forgot. Oh, so, when you don't have millions upon millions in your IRA, you can just sit around and ask for 40% because someone will come by and just want a 40% LTV. They have a massive property, of a massive value, but they don't really need a whole lot of money. They just got, they need to put their daughter through one last year of college or something. I mean, whatever the reason is they need the money, they're going to pledge this beautiful piece of collateral. And so if you only have $100,000 in your IRA, you shouldn't have to loan at 65%. Somebody out there wants a 40% loan for 100 grand on something. You know what I mean? Somebody. Yeah. And if you don't drive your rate too high, you'll find them pretty fast.
Yes.
So
absolutely.
That was one of the things about me being able to charge damn near 18% a year on my hard money, was because I didn't have that much of it. I understand if you've got billions of dollars in your bank and you got to get out billions of dollars or hundreds of millions of dollars, then you got to get competitive because you got that money. That money's got to be going out all the time. But when you have just a little bit of money, you could set 50% LTV, 45% LTV. And if you scream loud enough, that you have this money, but these are the terms, someone will show up.
Yeah.
And take the little bit of money you have and get it, and it'll be out. Right?
Yep. As long as that property's owned free and clear, we'll do it all day long.
Right. Or, there is such thing as loaning in seconds. We probably don't want to get way into it, but if there's only $20,000 in a first lien on a $500,000 property, I'll take a second. Loan 100 grand on it because I'll come up with the 100 and the 20 and I'll clear it up and you know what I mean? So it's all the same thing, but you have to have, if you're loaning money in a second position, the collateral amount, the value of the collateral has to be sufficient for what you're loaning and for what the first is owed. And you have to have the wherewithal to be able to clear it all up if you're going to protect your position. So that's
exactly.
a whole other story.
I teach from cradle to the grave, basically. So right now with the launch of the Academy, it's no seconds, right? Talk to me offline. We'll look at it. But as far from a teaching perspective, no second positions because your money can get held hostage or taken away from you very quickly.
Yeah, it's a super more sophisticated game.
Yeah.
What do they say? Don't try this at home.
Right. Yeah. Yeah. And look, seconds can be lucrative. Non-performing seconds can be very lucrative, but if you got to know how to do them. But it comes back to the first two core values of the Private Lender Academy, Mitch, both are ROI. Return of investment is number one. So if I got $1,000, I'm lending you, I want to make sure my $1,000 is going to come back. Then I'm going to worry about the return on investment, right? Is that 8%? Is it 10% or, whatever? But the core of it is, since we're private lending with our own money, is whatever I loan out, I want to make damn sure I'm going to get back first and foremost. Period.
In a reasonable length of time. Because
exactly. That's why we don't loan in New York State.
Yeah. So yeah, the return of your capital, it should be the primary number one thing.
Number one.
And then rate of return is second.
Mm-hmm.
If you can get a really good return on your capital, get comfortable with that, and get a high rate of return, then you've made the coup. But that's really only going to happen if you're doing the work, right?
Mm-hmm.
I'm not saying it can't, but
how passive do you want to be? Yeah, at the end of the day, right? As a lender.
That's the question. That's what I tell people all the time. You can make more money than I'm paying, but you're going to have to go to work.
Mm-hmm.
I'm going to pay, say 8%. That's not a bad, banks are offering what, 1.5% or 1%, I'm paying 8%. That's pretty damn good for passivity. I mean, really don't do anything but get the money to me, sign some papers, get the money back, sign one piece of paper called a release. So I have a book coming out here shortly. It's called The Art of Private Lending, The Art of Private Money Lending. And I may be sending, and I'm just going to give it to my private lenders who are considering me or would like to know how this works. And I might go ahead and recommend that they even take your course, your course, to get a little hands-on or a little deeper into actually the ins and outs if you're serious about this. I also think that you would be great for anyone who wants to start a side hustle and doesn't know what to do. I mean, this is a great business for a side hustle. You got a job that's bringing in the bills. Even if you don't have any money, you could learn to borrow from, get OPM and loan it out through this. And I would actually prefer that if someone was actually going to borrow OPM and loan it out, that they go through your course. You know what I mean? Because to lose your money is one thing. To lose someone else's money is a whole nother thing.
Whole different ball game.
Whole different ball game. Yeah,
Yep.
I've often said, I can lose my money, but I'll die before I lose your money, because that'll, I only got one reputation.
I mean, that's it, and that's it. And look, you've been around in real estate in the coaching a lot longer than I have, and there are, look, there's some bad apples, and they're all over Instagram.
There's always a bad apple.
Yeah, it doesn't matter what industry you're in. It could be car sales, it doesn't matter, right? There's always some bad apples, and to your point, yeah, you can absolutely, like, I like to crawl before I walk, right? So I want to loan my money before I'm going to go get and to your point, you're asking me, am I loaning out, am I making the arbitrage in my hard money lending? No, not right now. Because simply, I think, and this reflects in my own lending, I think valuations are a little cuckoo right now. And I think, I don't think we're going to have a great recession or anything, but I think there will be a market correction. And when there is, as you know, a lot of people are going to get shaken out.
Well, there's always a market correction coming,
Yeah, right.
It's like, I went to this mastermind in February, and they had this philosophy that I didn't like, but it was true, and you couldn't argue about it. As humans, we're either headed into a crisis, we're in a crisis, or we're coming out of a crisis. There's only 3 cycles. That's the crisis is how we function. That's how this world is built, on crisis, one crisis after another. If you think about it. And so the same thing with economic cycles. We're either headed to a downturn, we're either in a downturn, or we're coming out of a downturn.
Yep.
Now, this last coming out of the downturn has been about the longest prolific time of prosperity that I think anyone remembers. I mean, I don't know that there's been a longer time of prosperity between recessions.
If you weren't born at least in the 1980s, you have no idea of. I remember Houston in '82, right? I mean, just strip mall after strip mall and house after house being foreclosed on. Anyhow. Yeah.
You always got to figure you're heading into the recession. I'm constantly planning my business for the next recession. And until then, that's all I knew to plan for, because who would have thought of COVID? But luckily, COVID and recession kind of they had huge differences, but everyone's reaction was all kind of the same. My business models were built to withstand a recession. Because they were built to withstand a recession, they did withstand the problems of COVID, both on the lending side and in my house buying, selling side.
Yeah.
So,
and that's, I will still lend, don't get me wrong. And I'll help other people put their money together, but bring me a deal. Let's start there. Right.
You're probably not going to loan 70% on a sales price when people paid $100,000 over the asking price.
No, absolutely not. So, my point is, there's going to be some co-lending opportunities coming up with students and whatnot. And I'm not out there trying to get money for my own deals necessarily, although I'm finding out that it could be a moneymaker for me, and that may be a job that I want to look into. But, my point is to help people originate, draft up, quality loans that they can. I prefer to hold them until the end, because you make the most money. Or, if they need to sell the note, sell a partial, whatever they need to do, but make sure they do it up front properly to where it's attractive to an end buyer, right? Whether I'm selling that note or if I'm bringing, like, to your point, someone else's money in, I'm sure as heck not going over 65% with somebody else's money.
Maybe you got someone who says, I got 50, 60, 100 grand, sitting around, whatever the number is, and you wait around till there's a 40% LTV chance with that money and loan out their money with that super, super advantageous LTV, like, until you're more sure of yourself, don't even loan it out unless it's some absurd LTV in your favor.
Well, that's what I'm finding is, people want to learn. No, they want done for you. That's what people want at the end of the day. Right.
Well, a lot of the people that have the money are up in years, right? They don't want another job. They don't want to keep track. They're ready to go play golf or travel or do whatever, So that's why there's a certain amount of people that want to loan me the money directly for 8% instead of loan it to me for 8% instead of doing all the work and making 12 or 14%. You know what I mean?
Yeah.
Exactly. And I have no bones. Like in my book, I'm actually going to teach people how to do private money for themselves. Now, I am a choice over here. And if I'm a logical choice for you for what you want to do, then loan me your money. I'll pay you 8% and I'll give you a first lien, and you won't do anything but collect checks. If you want to make more money than that, go ahead. I was just noticing in our conversation, though, we did things almost exactly opposite. You started loaning your own money and are growing into borrowing the money for your own deals, or maybe making the arbitrage. I had to go to the arbitrage and borrow for my own deals out of necessity because I couldn't. Right. I was finding so many deals I couldn't fund them out of my pocket at all.
Yeah.
And now I'm getting to the point where if I just loan out my money to someone like me out there, I'll be fine. Mm-hmm. You know, and I'll buy some of my time back. You know what I mean?
Well, that's what it's all about, right? I mean, I'm at that age now. I'm a few years away from crossing this, the half century mark, which means that I have, my social life is filled up with more doctor visits than, and blood tests, blood panels, and I care to. But to your point, like I'm out here working a little anyway, right? So why not co-lend? Why don't come in with me? I'll do the upfront work, kind of thing. Like, I didn't want another job, but if I'm going to be lending, I might as well be lending other folks money and teaching them how to do it. And more importantly, teaching them how to be safe so that, look, we know real estate investors are very passionate, creative, and persuasive people. They also happen to be extremely cheap. Yes, I'm saying that out there to the universe, that
and they can be a bit devious, right?
Yes.
Some of the meanest personalities or most deceptive personalities I've ever seen was in this business. Of course, I saw a lot of people. Mm-hmm. They're not predominantly that way, but that's why I say you need to look at someone's character the best you can, because if they don't have good character, it's not fun to loan your money wondering what this guy's up to. One of the things I do when some people loan me money is I say, call my 59 people that I've owed for the last 15, 20, 25, 30 years that I've sent payments to. Call them first, because I don't want you laying awake at night wondering what my motive is.
Right.
So let's get this out of the way first. And so on the other side of that, if you're going to loan money, let's get their character out of the way first. Someone you want to loan money to or not? If the answer is no, move along. Move along.
I'm going to use you as an example, Mitch. And what I teach is the 3 Ps: the person, the process, and the property. Right. So I don't even look at the property unless I want to loan to that person. Right. As their character.
Character.
Right. And then, so I give me some, and look, people are going to give you positive references. I realize that, going into this. Right. However, in your case, I know your students. You have a reputation. Not only are you, look, first off, you're an investor in the San Antonio area, right? In Texas. Okay. That's the first thing I know about.
For 27 years.
For 27 years, right? You've done this before, right? And you're doing, we'll get to that, but you're repeating the same process over and over again. It's not like you're a landlord. You go, hey, I think I want to start flipping, right? Like, this is your lane. This is what you do. So there's your process. But the person, you've been doing it a long time. And what I like is you're a coach. You're, a personality in the real estate space. So that alone adds credibility. You're not going to do something foolishly that's going to harm your reputation, like you said earlier. Right? You only get one. We only get one. And when it comes to other people's money, that's it. You get one chance. That's it. So, in your case, I'm looking at your experience. I know your students. I know what you teach. And yeah, I've talked to some folks, and Mitch has never missed a payment. It turns out the borrower missed. But, Mitch paid back and, did what he needed to do. And so that you keep it passive for me. Right now, if Landon would take a little bit, he likes pushing work off onto me, but I'm like, no, I'm the lender. You do the work, buddy. You've got the staff to do this. But anyway, so I look at that person. So do I want to lend? Yes or no? It's a binary thing, right? Yes. Okay. I will loan to Mitch. All right. Now, what is Mitch, your process? You're sticking to the same one over and over again, right? Okay, good. He's done this before. It's not his first rodeo. I like that. And then, okay, what's the property look like? What's going to support, what's the collateral to my money, right? If everything goes tits up, what am I going to get? And then I look at, property, and I don't run credit. I ask people to run their own. I just, they can go to Credit Karma or whatever and you get a soft hit. But I do take their social in case they don't pay me. Because if I loan to an LLC, I do have a personal guarantee. So, the bottom line is I'm not going to run your credit. I'm not going to ruin your credit unless you're trying to ruin me first. So that's, I give the borrower the benefit of the doubt, and I will report to the credit bureaus if I have to. But by and large, it's that property. Is it $100,000 house? Am I loaning $60,000 on it? Am I loaning $50,000 on it? I'm looking at deals coming across Facebook. One, they're daisy chained wholesale leads. And, by the time I'm getting them, they're at 85% LTV. And I tell people, like, I don't care what the comps say right now. What did the comps say right before COVID? Where were we right before COVID? That's going to give you a better, I think, value of the home on a after repaired value than someone who right now is paying $100,000 over ask and over appraisal, I should say, on the retail side of things. So not to say you go with that 2019 number, but I would look there first before.
That's an interesting number, right? What was it worth before everything else?
Yeah, where before everything went crazy, what was this house? And I'm sure it was a nice little steady, depending on what market you're in. I should do it this way, but nice steady upwards. But coming in now saying, oh, $180,000, why? It's $140,000 house, at best, just because the market is crazy, doesn't mean it's going to be there tomorrow. And I'm certainly not going to base any of my exit strategies on that number.
I wonder if they're ever going back to those prices. I don't think they're ever going back to those prices, but it is an interesting number to look at because they can't keep going where they are. Or maybe, I just don't know how many people are leaving the blue states, coming to the red states and never going back because they've had enough. I don't know, but it smells like a lot to me.
Yeah.
A lot of people, because I know my county alone, Comal County, is the fastest growing county in the nation, like every other quarter or something. And they're coming here like tens of thousands of people every month.
Yeah.
They're coming from blue states that they're just tired of what's going on. Yeah.
Florida. I was talking to Gary Boomershine recently, and he actually he was looking at, I think, Florida, Texas, and a few other states to get out of the Bay Area and California, and then went up to Sacramento area and found, as he says, a community of like-minded individuals. And he said there's a bullet behind every blade of grass. And I was like, I can't wait to come visit. It sounds like a great place, very, very Texas-ish. So ish, I should say. But anyhow, yeah, it's going to be, I think, I do have a crystal ball, and look, it's dark. There's nothing, I can't see anything from it. I always joke, this is when I look into the future, but, I do expect look, we saw this same thing in 2008, right? It's just crazy overbids, over ask purchases. And, I'm in no rush to put my money out there right now. I will if the deal is right, but I'm in no rush until I think, we get a little shakeout. And when everyone else is scared, the banks are already tightening up. They want 800 or not 800, but they want higher credit. They're getting nervous. They don't want to put bad paper out there, bad notes. So they're tightening up, which means, so the banks are going to tighten up. That means private money, you might not like my terms, but I've got money and I can get it. I can deploy it very quickly.
Well, a lot of times, like, okay, so there's this question out there, maybe by some people that are listening, who the hell pays 14%? Who's going to do that? Who's going to pay 60%? Who's going to pay 18? Who's going to pay 10? Why would anyone do that? Well, a lot of times it's not the cost of the money. It's the availability of the money. If you can buy a $500,000 house for $250,000, there's $250,000 to be made on this property. The problem is, and this is what you have to understand why people pay these rates, is you can't steal houses in slow motion. Usually if a house is going for 50% of what it's worth, there's some kind of back pressure and a clock ticking, and a door is fixing to slam on someone's fingers, and you got to get the thing taken care of before that happens. So you reach over, you grab the 14% money, which we are very fast, right? You, me, private lenders are fast. I ask for 3 days, but you have to give me, and that's 3 days after you give me the title policy, the insurance, and whatever things I want from you. I have to have, and give me 3 days and I'll close. So that could really happen. In a day, you could get me what you want. So like I can close things I've closed things in 24 hours before because I had to, but I don't like to put myself under that kind of pressure. Who wants to do that?
No.
But we're fast. And that's why people, and then they become owners of that property with that huge equity. And then they sit down, take a deep breath, calm down, and they take their sweet time finding some more reasonable money or fixing up the house in a couple of days and selling it to somebody and making a good percentage of that 250,000 equity or whatever, so it's about the availability and the speed is why people pay. the interest rates that a hard money lender or a private lender might charge because of speed and availability. And
that's it. You can have this $250,000 in equity at 14%, or you don't.
Yeah, or you lose the deal.
Or you lose the deal. And I say, I mean, you're saying it's you don't get that option at all. So am I going to pay 50? Yeah. If the state of Texas, if I could hotel that house or flip it around immediately, Quincy Long at Quest Trust has a great slogan, or a great saying. He says, "What's a little usury amongst friends? Like, what's the harm? Like,
yeah.
If Mitch is willing to pay me 20%, what's the harm in that? He's getting his deal. He's making his $250,000, paying me my 22,000 or whatever back. Like,
the most expensive money in the world would be a partner, because a lot of people teach, you find the deal that has $250,000 worth of upside in it. Okay.
Yeah.
And then you go get a partner, and the partner brings the money, and then you all split. Well, that's a huge, if you want to convert that to interest rate, maybe they only had the property for 60 days and you gave up half of $250,000.
Well, if anyone's listening, I'll do exactly that for them if they want.
I'm saying, that makes it a lot easier. You get your money twice as fast. So I'll give it to you in 10 minutes, but so I hope we're answering that question. Just to go back to the question, why do people pay these kind of rates? Or why would people pay these rates?
It's availability. It's speed of the money.
It's much more profitable to pay the 10, 12, 13, 15% than it is to not get the loan.
Right. Yeah.
Because making a percentage of something's way better than making zero.
Yep. Exactly.
And I lived that way for a long time. Here's a nugget for the people out there. When you don't have money, you're a professional deal finder, writer upper. And the better your deal is, the better you're a writer upper you are, which means you can get a contract that gets time or more time or a lot of time before you have to close. Yep. You get a price that's good or better or best or outstanding. The better your contract looks, the more time you have, then you can walk around town, and this private money will find you if you scream loud enough and let them know that you need some help.
If you truly have a deal, the money will find you. You let people know, the money will find you.
Yeah. So in the beginning of my career, and the beginning of a lot of people's career, you have to understand, it's not about how much money you have. It's how good of deals can you put together, and how good are you at writing the contract so that they're solid. Yeah. And then you'll find all the money you want. And after you split with partners or pay those exorbitant rates, you'll slowly work your way out of an interest rate. One thing I found interesting in my book, I was writing this chapter. People that are willing to pay really high interest rates are probably not real seasoned investors, because the more seasoned an investor gets, the less he's willing to accept, 17, 16% money. He said, I'm solid. I deserve 10% or 8% money. I have a long track record. I'm not the risk that people think. And by the way, risk. Do you consider when you loan money that you're gambling? Because my wife thought I was gambling a lot of times. And I said, it's not a gamble.
No.
What do the stock market is a gamble.
Yes.
If you ask me, loaning money is a highly calculated decision that is either you're going to get or you're going to get more if you do it right.
Well, if we're going to stick with the gambling analogy, and if we gun to the head and we had to stick to it, I would say, yes, I'm the house. I'm making the rules. I'm drafting it to where the favor points to me, not you, right? So in that sense, casinos never gamble. The people at the table gamble. The casino knows it's going to get its money, right? So the gamble is made by those that are coming in trying to, look to get rich quick. When I make a loan, I don't consider it a gamble. I mean, is there a risk involved? There's a risk in every investment, sure. But I've put in all the backstops, all the redundancies to keep my money safe. So at the end of the day, even though it's a future transaction, I don't feel like it's gambling at all. I can't research the deck of cards at the blackjack table, right? I can research a property. I can research an individual and do my due diligence.
Good point. Right. Really good point. So I say it's a really calculated decision.
Yeah.
It's always a risk. There's always a chance. If God wants you to lose money on that deal, believe me, you're going to lose money on it. Who would have thought of COVID? I mean, who before COVID, that was never on my radar screen that a pandemic could hit.
No. Yeah.
And if you try to hedge yourself against everything that can happen to you, then you're one of those people that'll be paralyzed and never do anything, because there is no set way that it is a guarantee. There's just some odds are better than others. And you put the analogy of the house, they have the odds in their favor that if these people keep playing at this table, we may lose a bunch of hands, but we're going to win way more than we lose. Mm-hmm. And it's all going to be okay. Yeah. I don't like losing any. I've lost on 6 deals in my entire 27-year career. Luckily, they weren't all in the same month.
That's good.
They were over 27 years. I haven't had it happen. Well, I've had it happen the last 2 years. They're decisions like, I'm going to make this really big number this month, but I have this problem. I could get rid of this problem if I lose a little bitty tiny number right now on it.
Yep.
I think I'll take this month and lose that little bit since I'm having good on this side, and I'll just make a little bit less, but it's still a stellar month. Yeah. Stellar in anybody's book. You know what I mean? Or most people's book. So that's how on the ones that I've lost, none of them crushed me. It was just like, instead of making $80,000 this month, I'm going to get rid of this problem and I'm only going to make 70.
Right.
Still a good month.
Well, you're talking about, safety and security and risk. You can put your money in government T-bills, right? And make.
What was it paying?
Less than 1%. I mean, if you go 10 years at what, 1.5, 1.6 or whatever, but let's say you're in 1999, you're in Argentina and you put your money in Argentine T-bills, right? In 2000, they reset, right? And just because America is the reserve currency of the world today doesn't mean that we're going to be that way tomorrow, right? So
I'm getting more and more worried about that with every minute that passes.
Yep.
So you won't catch me in the stock market. You won't catch me. You know what? Learn how to do something on your own. That's why I love the loan business. I mean, if you know watches, if your passion is watches, fancy watches, loan on watches. Take a watch like a pawn shop. I mean, learn. You can start with smaller amounts of money. Whatever it is you're loaning on, just learn the ins and outs of that game. And don't be surprised is over the next 4, 5, 6, 7 years that it replaces your job. Mm-hmm. If that's what you want. If you want something to replace your job, then start learning how to do that. If you what Keith's offering you could replace your job, even if you don't have any money to loan right now, because there are ways to get money to loan, and you make the spread, or you participate, or you share. You're even actually asking to share, right? Mm-hmm. Yeah. So
I look at it like, I'm not going to recommend a student make a deal if I wouldn't put money in it myself, right? So, that's where I'm sort of at. Like, I want to teach, I want to coach, right? That's the bottom line. I was asked one time, if I had all the money in the world, what would I do? I say, well, I would teach philosophy at whatever university would have me. All right. Seeing how I don't have a PhD, and I'm not going to go get a PhD for that requirement to go teach, what's the next best thing? I like private lending. It helped me stay in the real estate game. When I went to, even though after when I was on the rigs, I can't go meet with property sellers, or contractors. I couldn't flip. I couldn't landlord, really. Came out of the field, started the landlord, realized I was horrible. Like, I really suck at it. And then I hired a manager, and then found out very quickly you have to manage the manager, of your rental properties. And so private lending for me was, I could still, as an insurance adjuster, I'd have to jump anytime something blew up. I was on a plane. But I could still, on the weekends, I could still go look at a property. And I still touch, see, taste, hear, smell everything I can. I want to go to the property that I'm lending on. And that's why I stick just to the Houston area. I don't have to go outside of the Houston area for that, except for Landon. He did make me go to Beaumont and a couple of places on the east side, way over there. But, hey, there's two colors in lending, right? I always tell people, look, I don't discriminate, but my money does. And there's only 2 colors you need to worry about in lending: black and red. Right? Is the number black or is it red? That's all I need to know. Right? Very binary. Make sure that number's black. Right? End of days.
So he's talking about the accounting formulas. You're either in the black or you're in the red. In the black means you're making money. You're in the red, you're losing money. So let's start there. Let's start there with making sure that we're not in the red. Right? We're not losing money. Right? And then we'll work and progress up to the but your point, you don't need, you could start doing this without, if you can find deals, right, and keep those LTVs low and keep the lender feeling safe. You don't need a license, and you can put these things now. That is real estate business deals, not owner occupant stuff. That
these are,
Oh yeah, let's get to that. Like we don't loan on, I mean, there's consumer loans and there's commercial loans.
correct.
Consumer loan is if you're loaning to someone who lives in the house and it's their homestead. That's a whole other different set of rules. You could be pursued for being predatory lending and a whole bunch of things, especially at the rates that we need to charge as private lenders or hard money lenders. So you want to do a commercial loan, which is essentially not commercial property. It's just you're loaning on something that a person doesn't live in. This is a property, an investment property other than their house that they live in. Any kind of property, could be land, it could be, anything. And you don't want to commingle funds. Like, when I borrow money from someone to buy a house, I borrow a set of money from one person. I give them a first lien. They're the only lender on that house. And if I don't pay them, they get the house. That's, I can't borrow half the house from this guy and half the house from that guy, because who gets the first lien at that point? You can only have one first lien. So you want to make sure you're compliant with the SEC and all that stuff. But that's one of the reasons you go talk to someone like Keith, is we just shortcut the whole thing and get on with the good part, which is loaning out money and being in the black and making some money for your effort.
And that's it. Look, and my money, as you know, in your model goes to, owner occupants, but that's not my loan. Your loan, your wrap is.
Yeah, but I own that house. That's the difference. I'm loaning on someone's homestead, but I owned that house that I'm taking the money back on. If I was to do, I can't make a third party loan. I can't be the third party between a seller and a buyer. I can't be the third party out. I'm part of the transaction. I'm one half of the equation, not one third.
Right.
So, and again, don't want to get off into the minutia of this. Tell us about your Private Money Academy. What's going on there? You've been working on that for a while.
The Private Lender Academy. Yeah. It basically it's launches in July. It's going to be ugly at first, not going to be pretty, but done is better than perfect. And I've got some beta testers and some students that are going through and helping me get it in a cohesive order, to other people, how other people think, but it's soup to nuts, right? It's, you're a professional, or you either have, money, you've inherited it, or whatever the case may be, you want to get into private lending. This is A to B. What is private lending? How do you protect your money? What to look for? What insurance policies to insist upon, title, property. And I lend in the Gulf Coast of Texas, so you're damn right, flood insurance from the National Flood Insurance Program is going to be required. It's $500, and if you can't afford that, you're not my borrower. End of story, right? Like it's too cheap not to have it. And we flood enough down. We've had enough 100-year storms in the last 10 years, to necessitate. I'm going to have some flood insurance on the property. So it is, but it's an online course, but there's also, I do weekly coaching calls where, bring the deals in, let's talk about it. Right. How do we know if a comp is truly a comp? Right. Well, let's, if you're using an appraisal report, let's dig into that. Let's see what, location, how close is the subject to the subject property? Does it have tile floors, or does it have laminate floors or hardwood? Is it a true apples to apples comparison? Look at the person. Make the loan. And it, like you said, it either you're going to get paid or you're not. If you get paid, there's nothing you can do. If you're paid as agreed as a lender, that's like the worst thing that can happen to you, because there's nothing you can do. Your hands are tied. Right. But if that's what
you want. You want the worst thing that can happen to you is that you get paid as agreed. You want
the
best
passivity
thing that can happen to you is if you don't get paid as agreed.
Right. And then now I can go get more money potentially, because I'm never, keeping the LTV right, and not buying into the borrower's hype or the investor's hype. Keeping my, standing my ground. I can make, if things go wrong, I can make more money, than I could if things go right. Now, there is, human nature comes in. Why don't we just lend to make sure things go wrong? That is, to your point earlier, predatory lending, whether it's a residential loan or not. You are specifically out there shystering, in my case, was my term, for money. But it's a windfall. If things go bad, it can be a windfall. It can help your position. And that's if things go wrong, if things go bad, right? Now, there are some risks that your money can be held hostage. Let's say the house gets struck by lightning, right? Well, you're probably not going to get your money back, and initially, at that 6 months, right? It may take another 3 or 6 months. But the point being, that insurance policy is going to make the collateral on your loan whole, right? It's going to bring that property back to where if you had to foreclose and get rid of it, you can. Right? It took you a little longer, But can you, Mitch, when I never owned it, but my ex-wife owned shares of Enron about 20 years ago, and she couldn't put insurance policies on those Enron stock, you
Right.
know?
And that piece of paper did eventually go down to zero and wasn't worth the paper it was written on, the
Nope.
promises. How it's very difficult for properties to go down to zero.
Yes. The tangible asset.
Very, very,
So,
very.
so
very,
let's
very
let's take this out here. Let's just say, like, let's just assume like Armageddon, dogs and cats living together, like it's just crazy mass hysteria, and the economics, our dollar completely crumbles.
Still going to have a place to live.
Still need a place to live, and if you're going to transfer title, you're still going to need some type of currency, right?
You know, one time my wife said, I like to take my residual leftover money in my bank account and I buy storages with it, self-storages. That's my forever play. You know, loans, you can have all the loans in the world, money coming in, but they're all going to expire. They're temporary.
Some point.
Yeah. But a rental property, apartments or something you rent goes on until you decide it ends. And so I'm doing the storages. And my wife said to me one day, says, you know, I wonder during really, really bad or hostile times, who's going to want to rent storages? I said, honey, at that point, they'll be living in them.
Yeah.
You know, and we may not even have money to pay for them, but we'll barter. I'll have cheese and I'll have lettuce and I'll have vegetables and I'll have cabrito and I'll have everything I need, you know, but we may not be trading in money at that point. But if it gets that bad, there'll be people that want to sleep in these cubicles, you know, so they're not being rained on.
Yeah, exactly. And the people need a place, to your point, you know, and it's going to be, how can you lose? I don't know. I mean, you might have some short-term bumps in the road, but
that's one of my problems. And I can scare people sometimes by thinking cataclysmic or even talking about it, but I like to talk about the worst case scenarios, and it's scary. And sometimes I lose my people because I say, you know, if the world goes to hell in a handbasket, this is what happens.
Yeah.
You know? So, you know, I want to send everyone to 1000houses.com / Keith, KEITH. And over there, you'll have all the links and everything that we need to get in contact with Keith Baker, to talk about his private lending academy, to see what he has to offer. I'm sure they'll, whatever giveaways he has, if he has anything, it'll be over there. So go to 1000houses.com / let's make it Keith B, just in case I've used Keith before in a keyword. You know, I'm going on my 500th interview, and it's like I'm starting to worry that I'm using keywords that I've used before. So
I noticed, and that's, yeah, for me, it was, you know, it was one thing up until I got to the 100 episode mark. And then after that, it's like, man, now this is work, you know, like it's keeping track of everything.
yeah.
So, yeah. Okay. So, yeah, just go over there. The links will be there. Links to the website, also, you know, to the Academy, Private Lender Academy. And also I do private coaching, but, you know, my email will be there, and I do that on a one-on-one interview style basis, because I'm not for everybody, you know, and I want to make sure that we can jive before, you know, we
that's good. I like that. I do the same thing. Like, someone wants to hire me for coaching, you know, especially the highest levels, you know, it's like, let's see if we're a fit first. Like, because if I can't help you get your money back on this deal, or if I don't think it's working, we'll do something else, or I'll recommend someone to you. But like, I want to be on a winning team. I don't want to be on a losing team. No,
yeah, exactly. I don't want to be a cheerleader on a boat that's going down on the Titanic. You know, you know, let's look at it first. Say, oh, there's an iceberg out there. We might not need to be doing this right now.
All right. So, I love this business. I think it's a great business. I mean, it's probably the second oldest profession in the world, loaning money. And
can I steal that from you?
Yeah.
I love that. That is, I was about to say, you know, why do banks have their names on the largest buildings and sports stadiums in towns? What do banks do? They lend money, right? And look, that person who becomes a loan officer, they hired them off the street. They're a teller. They didn't go to college for finance. They didn't go to school for construction, right? None of that. These are just, and they train these people. Look, here are the criteria that we lend by, right? Either everything falls in the box or it's outside of the box, right? And it's the same thing. Like, there's no reason why you can't do this in your retirement account or your cash accounts.
Yeah. And you don't have to spend $1 billion to spend 4 to 6 years in a school getting a finance degree to be your own bank, you know? And class gets extremely interesting when you're learning how to protect your own money. I mean, it gets extremely interesting, and it'll be like no other class you've ever taken, because you will actually like really want to pay attention. I mean, you'll be dialed in like crazy, you know.
When it's your money, it changes the game.
Yeah. Yeah. I was sitting in economics class. I only went to 2 semesters of college, but you know,
probably 2 more than you needed, Mitch.
Well, I was sitting there listening to my economics teacher who was telling me about how he's having to file bankruptcy. And I leaned over and says, this guy's teaching economics and he's filing bankruptcy and I'm paying him. I said, how much does this guy make? What did the university pay? They said, it makes like $50,000 a year. I'm like, so this guy's making $50,000. He's teaching me economics and he's filing bankruptcy. I said, this whole thing doesn't make any sense. I'm out of here. And baby, I did. I picked up my books. I walked right out of class and I remember waving at him. I said, see you later, economics teacher. Bye.
Bye-bye.
Like, what am I doing? I'm paying money to listen to this guy. So, all right.
You don't need any of that to be a private lender or a real estate investor. You just need drive and determination. And that's
Well,
it. And a little bit of money to be a lender. You need some money. You need some money to be a lender.
The education's out there. Make no mistake. There is no free education. You either pay the street or you pay Keith Baker. You either pay the street or you pay Mitch Stephen. You either pay the street or you pay Ron LeGrand or Lou Brown, or you pay somebody. But believe me, the street can wear you out and cause you to quit you'll run out of money and you'll have to quit, or you'll be demoralized. The street's not a very good cheerleader. It's not going to slap you on the back and say, hey, get on up. We can fix this. The street will never say that. The street says, try it again, fool.
Stay down.
Take more of your money.
Yep.
You know, you got a coach. They're like, don't turn that corner. I know the people that live down there and you won't survive it. Go down this corner. And then, you know, let's do it this way. And it's so much more, there's such a lot less stress. You're still going to be spending some money out of your pocket, but it's a lot less stress. And you have a better chance of ending up where you're supposed to go. I graduated from La Calle U. That's the street in Spanish.
The street,
I almost quit. The street almost made me quit. It was so hard on me. I would have quit a business because I wasn't smart enough to hire a coach at the time, 27 years ago, and they weren't as prolific as they are now. And there wasn't the internet and all this stuff. I almost quit. And when I look back at that moment, when I took my last $10,000 to give to a coach to help me, was when I turned the corner and I didn't quit. And I stayed in a profession that, little did I know, was going to be worth millions upon millions upon millions to me over my career.
Absolutely.
And to think of how close I came to throwing it up and real estate investing just be another business card in a stack of a lot of business cards I have, by the way, that didn't work, of things that didn't work out.
Yeah.
And so what's your advice to maybe the new people that are just contemplating, they're looking for something to do, they don't know exactly where they belong in this world, but they know they don't want to have a job for the rest of their life? What's your advice to them before we wrap it up?
This is going to sound completely, weird, but take everything off the plate and just get real calm. Go to the woods, sit with yourself, figure out what it is that one that you're good at, the things that you could continue to do. For me, I got to a point where I was in a career where I could put my feet up on my desk and coast, and Mitch, it scared the hell out of me. And so I got real quiet and I was like, okay, I'm going to continue my day job doing the insurance adjusting in the oil field, because when I like it, I get to go to cool places like the Straits of Magellan in London and Lillehammer, Norway, right? It's fun. But I keep the private lending because that is sort of my passion. That's the creative outlet with the podcast, with the academy. So for me, it's teaching and being, I don't have to be so involved in real estate. I want to be involved in real estate, right? I don't want a real estate job necessarily. So that's, for me, it's defining what I'm comfortable with, what I'm willing to do. After that, if private lending is in your wheelhouse, great. Maybe it's wholesaling, right? Maybe it's owner finance, whatever, real estate, or, I would stay away from the MLM, multi-level marketing stuff if possible, but just try to get quiet and realize that a lot of the noise in your head, you create yourself. Right.
I would create something that you create, that you own. That's the problem with MLMs. If you ask me, they can fail, they can have a fault, and then all that work that you put into them, they can go down. I would at least like to look in the mirror and go, if it failed, it's because it was me.
Yep.
Right?
Exactly.
Not someone else.
Yep.
Also, I want to really caution people not to see, it's always kind of a catch-22. You don't have to have a huge multi-million-dollar goal. Really, maybe the first thing you want to do is just figure out how to replace your income. If your income's $3,500 a month, that's your first goal. And all of a sudden, that little goal, which is probably the most important goal of all, because once you get the $3,500 a month coming in, you can quit a job that probably requires 2,600 hours a year from you. Mm-hmm. And now you can take that extra 2,600 hours you're going to have and figure out how to make that $3,500 into $7,000 and into $10,000. And you just keep trying to up your game a little bit and see where it takes you. Some people say, I want to be making $100,000 a month at the end of 15 years. I never looked at anything like that. I always just said, I want to do better this coming year than I did last year.
Right. And
it has exceeded my wildest dreams. So don't think you have to have these huge obstacles.
Nope.
This is Mitch Stephen with the 1000houses.com podcast. I would like to thank each and every one of you for stopping by to get you some Keith Baker, who has to get out and get his yoga pants on. So we got to let him go. This is Mitch. We out of here.